The Santa rally is well underway in the crypto market, and if you've been holding Solana, God bless you. You are much richer today than you were yesterday. We're going to be discussing that, the latest going on in the bond markets. I know that's really exciting, and much more today on Money Never Sleeps. Welcome back, everybody. As we get going today, do us a favor. Hit that like button, subscribe to our channel. Nothing that Kevin or I say is financial advice. Let's get that out of the way. So please do your own research before executing any buys or sells. Kevin, closing in on the end of the year. The Santa rally, like I said, has begun. Crypto is pumping today. A lot of these alts are on a moon mission. Solana up almost 13% since the start of the most recent trading day. So that is absolutely wild. You love to see it if you're a Solana holder, especially if you bought back a year ago in the depths of the FTX panic when it was, sub $10. You are just tap dancing your way to Christmas right now. What is on your mind today? I know we want to discuss FedEx earnings and their poor outlook, the latest in the bond market globally as far as people trying to get risk off to some extent heading into next year. We want to look at some of the crypto charts, some of the stock charts, including Coinbase and the Russell. Let's start wherever you want to. I'm going to let you take the lead here.
Yeah, absolutely. So I think we should start with FedEx just because that's going to give us foresight into the future ahead of what we're expecting, because Q4 earnings are coming up mid-January, right? And it's going to be really interesting to see how this is going to affect a lot of the earnings. Now, FedEx has a very weird schedule where their earnings report earlier, and I think the end of their fiscal year is in May. So they're one of those weird companies similar to, I can't think what other company, but it's not on the traditional pattern. I was gonna say Nvidia, but Nvidia's around the same time, and it's just like a few weeks delayed. But yeah, so for the most part, FedEx right now, their outlook seems very grim going into next year. That we're probably going to be seeing a lot of slowing down. Let me just pull up the article from CNBC because I thought I had it up, but I accidentally closed the window. But we saw the shares tumble terribly yesterday. Here we are. FedEx shares tumbled 10% after weaker demand hit revenue outlook. Just key points here. Company lowered its full year sales outlook. The Company Express unit was hit by lower demand. FedEx results fell short of estimates in the fiscal second quarter. And the interesting thing is they think that they're going to be able to combat this by lowering costs for a lot of their divisions, which I don't know if anyone knows this, but that probably means there is going to be some layoffs moving into next year. Is it going to be crazy? I don't necessarily know. We don't have too much information on that yet. We just got the information on it yesterday. But it seems like there is a pretty big problem across the board for FedEx. We saw UPS dropped 1%. So if we want to look at the chart right now for FedEx, we could take a look at that because it ain't pretty. Let's put it that way. I haven't actually seen where they are since the beginning of the show. So let's see where they stand since yesterday. They were trading around 280. 280 was the number that we were looking at before that news came out. And then you can see the absolute gap of where it ended up. So right now it's at about 249. Let me just get rid of this Bollinger Bands, get rid of the stochastic RSI. Let's get rid of this right here. But we could see, kind of have to zoom in for this one, but this is where it was on Tuesday. And then Wednesday morning, which is today, it absolutely tanked in after hours, right? That's a massive drop. And we can see that today it's down 10.95%. I mean, from the height of this, it's down, all the way to the bottom where it went. It was about 13, almost 14% that FedEx had dropped off that news. I don't know if it's a sign to you, but for me, this is a sign that we're not expecting a lot of revenue beats, I think, going into Q4 earnings in January. And FedEx is kind of amid the holiday season, going to be telling us something that's, hey, maybe the packages aren't rolling out as much as they were in years prior. Maybe we're not going to see that strong of of labor, not labor market, but retail sales going into the Q4 earnings. So this is really interesting to me. I think a lot of people are underplaying it, but clearly the stock did not like that news. And I think we could be seeing a lot more of these massive gaps if earnings do come back very similar to FedEx's outlook.
Yeah, once again, this is in line with the poor consumer, health of the consumer, discretionary spending, all of this stuff. Like, we're at a point of just insane euphoria right now.
Oh
and
yeah.
it might need a little bit of a gut check. We'll talk about that more when we get into crypto. Let's get into the bond market next, because we're seeing a lot of red on the board, which means yields are going down because people are buying more and more bonds heading into next year, trying to lock in higher rates before, here in the US at least, before the Fed starts pivoting. If you locked in a 2 month, or sorry, a 2 year or a 5 year, in these, a while ago when it was back well above 4, you're feeling pretty good right now. But I think a lot of people have this view that they want to lock in these better rates for these mid duration bonds, because maybe the road is going to be rocky ahead.
Yeah, and the question is who's buying these too, right? I think obviously yes, some investors are getting ahead of it. I wouldn't be surprised if it is some of the banks getting ahead of this as well. They got screwed horribly, horribly in 2021, 2022 with those low yields. And then next thing you know, they start shooting up like crazy, right? So I think that they could be hedging. They could also just be preparing because, again, these guys have their ears close to the ground. They kind of know what's happening in the markets. Even if the equity market seems like it's going a bit crazy, they can go that can be as irrational as it needs to be. We know that the equity market is a bit of a lagging indicator of what's going on in the actual market and the economy. That's why we wait for the rate cuts before we start to see any type of major shift. However, things are really interesting in this. This is the 2 year. And the thing that I think is really interesting is that the 2 year is finally outpacing the 10 year in terms of negative yield percentage per day. So we're seeing that this is down negative 1.4%. The 10 year is down negative 1.2%. This is exactly what we want to see, right? This in line with initial jobless claims. If that begins to go up as the yields go down, that means that the curve is likely to revert, to uninvert back to normal, at least back to zero at some point next year. And it depends on at the speed of which this happens, right? And I'm just talking base level, in the United States. So we can look across the board, even on my right hand side, you can see that the 1 month is unchanged in the day. Everything else in the bond market it's pretty much negative. I mean, even the 30 year went under 4% early in the morning today. We saw that we are under 3.9% for the 10 year, which shows that a lot of people are trying to lock in those gains. And I don't know if people are noticing this, but these crosses are coming in, and we will talk about another death cross that we did get today, and it's on something that I'm very bullish on. So I think that there is a bit of a surprise coming to these markets. Maybe not today, maybe not next month, but soon. And we're seeing these death crosses are probably going to be hitting for the 2 year very soon. Now let's take a look at where the last 2 year death cross happened, and we would have to go all the way back to not even there. We'd have to go all the way back to March of 2019, right? What happened in March 2019? Well, there was a bit of banking problems that finally bled into the point where in September 2019, they pulled the reverse repo away, and the banks had already been cutting rates at a fast rate by June, July. So that's a really interesting thing to remember. We are expecting rate cuts, and once we get that death cross on this, we can expect that in a few months later, maybe we see the onset of a recession. It has to go in line with jobless claims, so that's going to be really important. Initial jobless claims, people starting to lose their jobs and file in any way to show that there aren't necessarily people who are being hired. We did see that job openings are going to be probably coming down as well. Let's take a look at something else that I want to show you guys, and it's just not in the US. Now we're going to take a look at the global bond market because this is also really interesting. This is the 10 year across the major economies, and this is everything on the weekly. Everything on the weekly absolutely red, right? And what's happened recently? We can think that a lot of things that have happened have been central banks being extremely dovish. Both, I think the US Fed is one thing that's causing this. We also know that UK inflation came down faster than expected, like a significant amount. I think it's down at 3.9%. Forecast was 4.3, and the previous was 4.6. We even got Fed president, is she president? I don't know. Fed Harker, whoever that is, in the US. Again, she doesn't speak often, so she did speak today. Is it he?
Pretty sure it's a he.
Oh yeah, Barkin and Harker. It's
Yeah,
those two. There we go. That's what it
yeah,
is.
I'm calling them like Barkin and all sorts of Barker, Harker, whatever. I screw their names up every time. Yes, they're both
The only
males.
the only one I know is Goolsby, or because that's just a wild fucking name. But these
Loretta
guys got some wild.
Mester. I know way too many of these people's names. Like
What was
it's
the
been.
one that you and I liked? The one guy he quit.
Oh, Bullard,
Bullard,
dude,
yeah,
super
Bullard,
bearish.
the bearish Bullard. I
Yeah,
loved him, but Yeah, but across the board, we're seeing that these yields are coming down. If we look at this on the monthly, we see that they are down significantly as well, right? We're down about anywhere from 0.2% all the way to roughly 0.75%. And this is really interesting too because we know that something changed in October. So the year on year is going to be a little bit skewed here, but I think that come next year, we're going to start seeing all these fairly significantly red. And this is telling me that markets around the world are locking in these yields because they know that there's a good chance in their respective markets and also in the United States that there might not be as much of a huge push to the upside as people are anticipating. And that's something we need to keep an eye on because the bond market, I don't think ever gets it wrong. I mean, they could get it wrong this time around. We could actually have a soft landing, but I'm betting on the fact that something that's never happened before is probably not going to happen once again. I think the data is just lining up with everything this is going to be a bad Q4. We're going to start to see the year start off a bit rocky. There's a lot of issues in Asia right now. We talked about I sent out a thread last night about the BOJ, which is a really interesting scenario where the world right now is lowering rates while they're thinking about raising rates, and how demand across the board could just absolutely decimate any chance of that even happening. So I think speculation in the markets right now is extremely dangerous. And I think that we need to be kind of in tune with what's going on in the global bond market, especially in the US, if we are anticipating any type of soft landing.
Yeah, if you want to talk about with the markets right now, one thing I've been keeping an eye on as per usual is what's going on with the Fed funds rate, the futures there. And we've seen this move, like the Fed saying 3 rate cuts next year, the market's saying, nah, we think you're going to cut it 6 times. And so that to me is the market's getting a little out over their skis potentially. And if it is cut 6 times, not for reasons that are going to be good. So it's this really weird dynamic where the market's kind of like calling bullshit on the Fed, but it's all going to come down to the data, and we'll see how that plays out. Let's get into some. Go ahead, real quick.
I was going to say, even with the supply chain, I think a lot of people are also betting that, oh no, we're going to see an inflation spike. To anyone who's on the bear case of, we still have a lot more in this inflation battle, I think they're way off on that. The supply chain issues that we're seeing both in Panama and we're also seeing in the Middle East, I think that's going to hurt the companies more than anything. And it's not going to necessarily hurt people who are buying these products. I think we're starting to see demand go down globally. And we're also, I mean, Barker, whatever her name is, they said, they said today, I can't remember what it is, but it said today that, I'm hearing things are starting to soften faster than data suggests. That's not necessarily, I mean, there's been double speak from the Feds for the longest, for the past 2 weeks.
Oh yeah,
They've
that's
been
what they
saying
do.
back and forth, trying to confuse the markets. But that kind of said the quiet part out loud for me. And I'm like, you know what? If, the supply chain thing does happen, short lived. I think that's going to same thing with the oil. I think we're getting a corrective bounce here in oil. I think we're going to continue to see deflation happen, man. And it's very dangerous. And I think people are, bears and bulls are going to be screwed by this in both directions because their horizons of what's happening are just too short and too kind of focused on price movement for the time being, not necessarily data dependent like the Fed says they always are.
Good point here from Chris Hoddle. If there was triple speak, they would in fact do that. Let's run through some charts that have gotten our attention. Let's start in TradFi. I want to look at, you wanted to look at the Russell. I want to look at Coinbase. So I think that's a good place for us to begin.
I'm going to do one better because we got to talk about the one death cross we did get, unfortunately, and it's on the greenback, guys. I know. This is a sad day for me, but I got to zoom in all the way so we can see it. Right? Look how much I got to zoom in. There it is.
Right there. It is.
There it is. Yes, I do. Unfortunately, we got to play the.
All right.
Yeah, it's whatever. I think everyone's counting on the dollar being dead. We don't understand that there is a dollar shortage and there is a dollar short. People are dollar short, not short positions, but they're short in general in terms of US dollars. That impacts trade. We know that, people are going to use the dollar to swap currencies when they do make trades in international markets. We also know that if there's any type of insolvencies or debts that need to be paid, the dollar is going to be king every single time. So right now, it's bouncing back a little bit today. It's at 102.365. We know that the yen weakened on the BOJ news. I'm not counting this out, man. I think that there is still way more room to the upside. But with that being said, is deflation going to hurt the dollar? Partly. But if deflation gets to the point where we're in a financial crisis, I think this thing's going to take off. That's just one thing we needed to keep an eye on. I think people are betting that we saw hedge funds are max position short on the dollar right now. And we know how they chase the bottoms and they always sell the bottoms and they buy the tops at this point. That's why the stock market keeps going up crazy. So it's just something to keep in mind. I think that this is going to be one that people are going to start changing their tune to come January, February, and especially March of next year. But let's look at the Russell, because that was one thing that we were talking about recently. And we could see that it pulled back pretty good. And this kind of lines up with, what we've been saying. We're seeing the whole TradFi kind of pull back. First time I've seen the S&P in, I don't know, 40 days and 40 nights, negative 16. It's, we haven't seen any pullback in the TradFi markets right now. So take this with a grain of salt. The year's not over, but we just need to keep an eye on that. Look at this on the Russell. We got this wick all the way up, and it came right back into the supply zone. So the thing that's interesting about this is that it put in the yearly high. And we know that with the yearly high, we were waiting to see, okay, what type of pattern are we building here? And I thought it was an ABC pattern to the downside, 5 waves down. I thought it was 3 waves in the middle, or maybe something more complicated. I think it's a WXYXZ pattern. The stupid corrective pattern. It's one that I don't talk about often because it's terrible to try and justify, but it's kind of like a triangle that goes sideways. And that's our corrective pattern, I think, for the wave B. So what comes next? Well, if that tends to be what happens, and we're going into next year, we know that Q4 earnings are going to come out for these small caps. Maybe this little rally right here isn't going to live for so long, right? We see that the stochastic RSI is the most overbought it's been since, the height of up here in November of 2021. Price isn't up there yet, guys. I think a lot of people are betting on small caps. I'm seeing it all over CNBC. I think we're going to come back down. We just got the golden cross on the daily down here. And like I was just saying, when you get the crosses, it reverses the opposite direction fairly quickly afterwards. And that's just a matter of, positioning people. It's kind of a lagging indicator, but if the dollar is going to a death cross and it's going to a golden cross and this is overbought and the dollar is oversold, well, then it's probably going to switch the other way come next year. So it's something to keep in mind. I think a lot of people that you're listening to right now on CNBC and Bloomberg saying small caps hold the key of, those are the ones that are at an extremely undervalued right now. They might get more undervalued in the coming year. Just something to keep an eye on. I think this pattern is going to play out. I think we still have our wave C to come to the downside. Now, one that we need to talk about is one that you brought up, and I'm going to make a case that we see more downside moving forward. But look at that. I have to even zoom out here. This is Coinbase on the daily, and if we zoom in here, it's the Burj Khalifa. Just straight up. I mean, it's nonstop going up there, right? Broke through that parallel channel.
Nuts.
What can I say, J-Web? You take this one away, because all I'm going to point out is that this is wave 4 of a wave 5. I have a 5-wave move.
I mean, it's if you bought back in the 50s, congratulations. Like when it was down, like our guy Mr. House did in June, when it was, all the fear in the world around Coinbase, then you have, 3x from here. That's insane. We've also seen that Coinbase has had to sue the SEC, to get guidance on how to deal with, on how to do business. It's crazy to me that the SEC, Coinbase is asking for regulation. They're asking for clarity. And the SEC is just like, nah, we're not going to deal with all that. I don't know what's going to happen near term, but I am still very bullish on Coinbase long term. Although if you've seen their commercials on the TV, the one with the little talking baby kind of skeeves me out a little bit. So that's the only thing I'm bearish on when it comes to Coinbase, is that little baby in the commercial. But they've done a hell of a job of bouncing back after a very, very poor middle of the year.
Is that a top signal, brother? When you say that Coinbase has commercials on TV? Last time I remember they had commercials on TV, it wasn't such a great year that followed. Remember Super Bowl, right?
Yeah, I don't really think that has anything to do with it.
Discretionary money.
I don't think that, FTX hiring Larry David for a commercial is why they collapsed or anything. So I don't see the correlation there, buddy.
It's that talking baby, man. He holds the key to this market cap tanking. But no, I remember Coinbase's Super Bowl commercial. It was absolutely shit. It was just a blue screen and black text. But nothing too crazy.
And they're asking you to scan a QR code, which is basic safety in crypto, to never scan a fucking QR code. Come on. Anyway, let's finish this up and let's get into crypto.
Absolutely. So when we look at this again, I say 5 waves because we had this. I mean, there's no other way to put it. I think that this is a 5-wave move. I don't think it's a 3-wave because we haven't had any moves to the upside. So I think we began with a 5-wave. It will change at some point in history when we're in an actual bull market. But IPOs in the bull market had a little second rally towards the all-time, when everything was hitting all-time highs, put in a lower high, massive 3-wave down. And now we have our wave 4, but it's a 3-wave move, I think, in my opinion. So, I mean, and again, I think that this is wave 1. Sorry, wave A. We had a little bit of a correction here. Wave B, wave C, and we could say this is, sub waves within it. But the key here is to see where this wave 4 goes to. If we do not cross this low down, this, I guess, high 208.51, if we don't get higher than that, this is still extremely valid where Coinbase could absolutely collapse. And I think this is lined up, and we'll go right into crypto right after this, with Bitcoin's price, right? Bitcoin's having a great day. Clearly, Coinbase is having a great day. Bitcoin's had a great few weeks here. I mean, a few months at this point. I think Coinbase is doing extremely well because of that as well. So I think that there is still room to the downside when Bitcoin decides there's room to the downside. And Coinbase, I think there's a good chance that we're going to put in a lower low. Our low down here back in, what was that, January, it's $32.29. I think we can put in something lower than that. So you might be able to pick up some Coinbase on the cheap, but it really depends on Bitcoin's price action and how low it goes. That being said, let's go over to Bitcoin because that's going to be, there's a lot of stuff going on over there. And one thing that's going on over there is the price going up, right? I think there's a case that we can get to 45K. I genuinely do. And I was sending some people last night some of the funding rates, and this chart isn't even important compared to the funding rates. Let's see if I can pull this up. That's liquidation levels. Let's pull up the funding rate. This is going to blow your mind because you can just see how max long everyone is. This is absolute insanity at this point. So red is bad. Let me just put it that way. Red is not good. That means people are going mass long, but they're going mass long to a certain extent, right? We're starting to see some green pop up here. That means people are going short, but look how little the green is, and look what assets they're green for. People are shorting BNB. All right, and it's short on Binance, so that tells me, all right, Binance is shorting their own coin. They're just liquidating people who are playing with their Chuck E. Cheese tokens at that point. But across, that's what BNB, Tether, all that shit is, Chuck E. Cheese coins. But yeah, I mean, across the board, everything is freaking red. I mean, some of these coins that I've never heard of in my life, or some of these even like INJ, which is very similar to BNB, in my opinion, there's a lot of them that are just super long. And it kind of makes sense when you look at the liquidation map, right? And I think this is a lot to do with retail that are playing with derivatives. They're playing with, these positions. And we will get to derivatives at the end of the show real quick because there's something we need to take a look at. It might be a black swan, kind of. I saw before the show started. But Bitcoin's exchange liquidation map, we're right here. We're sitting at 43,867. Look at how much liquidity is below us, but the price wants to move up. And why does the price want to move up? Because it's building more liquidations way below us. And it's going in a place where, hey, we're getting to a point where eventually we're going to hit a top where no one else is going to buy in, right? And when that happens, we have all the liquidity in the world to just take out on the way down. It's going to be like, I mean, it's literally like a roller coaster ride at this point. We're just slowly getting to the top, going to the top. And then once you start going to the bottom, everything just goes within. The more that people get liquidated, the faster the price is going to go down. It's going to be an absolute spiral just straight down. But we're not there quite yet. I think that we have to get to this 45 level, maybe, at the most 46.5. It's very possible. It's about $2.46 billion worth of liquidations. I don't know if we'll get to 48 down here. That's kind of pushing, in my opinion. I think things are going to start changing come January, especially once the new year begins. But if we go back all the way down to 36K, we're looking at $8.4 billion worth of liquidations. That's just at 36K. Think about what's all the way down to 30, where there's no support in that range because we just went straight up in late October, early November. It's going to be really interesting with this. I don't necessarily buy this one bit. I mean, we could take even a look at, say, let's take a look at ETH, and then we'll take a look at Solana because Solana is interesting too. Yeah, ETH 30-day, once again, it seems like there's a bit of a gap here, but I could honestly see us filling this maybe one more time. Unless Bitcoin's dominance remains extremely elevated, then I think that we could just get a little bit more. People go long, and then we just liquidate everyone down because we only got about $3.10 billion on this side, and on this side, we're sitting at about $2.36 billion. So logically, I would think that they will want to screw more people over, so the price will push up maybe 2,400 again, but I'm not going to bet on anything like that. Solana, on the other hand, Let's see how this is playing out. Yeah, man, they're just this is a very different situation too, because we're looking at millions, and then that's not that huge of a range. I think this 100% is all FTX needing to get out at a higher level. This is higher than the FTX collapse, so this is benefiting a lot of people who are exposed to Solana that were in terrible position. So I'm not convinced that a lot of this is going to last if Bitcoin's dominance continues to rise. And we know that there's headwinds coming next year. I mean, just looking at let's pull up Bitcoin dominance. You said before, or right at the beginning of the show, 53.98%, almost 54 again. There's more room to the upside, in my opinion. You look at the daily stochastic RSI. I think there is a good chance that we could be heading to that 57 level. Could that be us getting to 45 and alt starting to bleed a little bit? 100%. I mean, we've seen Matic pullback. We've seen some KuCoin pullback significantly too. BNB is actually on a pretty good tear. Solana's on a good tear today. We saw the pullback in total market cap, and if we look at alts, they're kind of just plateauing at this point. Sure, there's room to the upside, but for the most part, for the past few days, since the 8th of December, we're getting pretty close to the point where it's just, flattening out. Maybe one more push to the upside, but let's not press our luck here. When we look at the weekly, 199 for total alts, and then for the monthly, 89 and 66. Month ends in a few days. I'm not getting too carried away looking at some of these prices here. So just know that there might be a dubious plan for crypto where they're going to absolutely sweep the leg. If you love Cobra Kai and Karate Kid, I think they're going to sweep the leg in 2024. Doesn't have to be right away, but I think people hoping that this ETF comes, I think the ETF news has already been priced in.
Yeah, there's a lot that's been priced in right now. But no, and everyone, the euphoria and the greed are getting there, man. Like the greed, the fear greed index is heavily toward greed at the moment. So not a great place to be with a lot of the questions out there.
For TradFi, it's almost 80 right now. So it's extreme greed. So, I mean, it's pretty much maxed out at that point. Anything above 75, I think, is extreme greed. Across the board, though, let's look at this because TradFi is actually down for once. Dow's down 216 points. The Russell's down another 10 points, 151 for the NASDAQ, and then 39 points for the S&P. So we're seeing a bit of a pullback here today. Is it warranted? Yeah. I mean, shit, it's been overbought for so long, but am I getting convinced that this is the end of the move? Not one bit. The thing that's really interesting here and I talked about derivatives right before we talked about, futures and funding rates. Derivatives are a very dangerous thing. Derivatives were part of the reason that the entire, financial world almost collapsed back in 2008, right? Subprime mortgages and people were using margin, very dangerous. And they introduced 0 days to expiration, those options contracts. Well, what's the point of them if the price keeps going up, right? That's a very dangerous game. You're pretty much just hoping that it never goes down. And at that point, if you think that's easy money, market's going to turn on you at some point. And, I talk about, people who are in the wrong sides of the trades. I think there's a lot of people who are short bonds still because they truly did believe that the market was going to continue going up and we were going to see rates higher for longer. If you're using margin and shorting bonds, I think you're screwed at this point, and that's a lot of hedge funds. And I think that the VIX trade, if we look at the VIX one last time, it's at 1278 today. It's up 2%. And we're getting to that point where we're just kind of sideways trading here. Eventually, it's going to break down. It looks like it's overbought on the daily. Wait till next year. I think after we get Q4 earnings, once we get an OPEX day, whether it's in January or it's in February or even March, once we get those OPEX days, I think there's a good chance we could see this absolutely just spike up in a violent way. It doesn't have to go to 50, but it can go to like 20, 25.
Wait till we get the Fed pivot as well. Like we know, we've talked about how that goes. Every time there's a pivot, there's a market correction. So let's just, get ready and buckle up for that.
Look at that, dude. That's what I was talking about 100%. This is why fucking derivatives are bad. Look at this SVIX. This is obviously an ETF that's the inverse of the VIX, but it's down 5% today out of nowhere. This is a huge move to the downside. You're going to start seeing a lot of this. That's why the dollar's also going up right now. We're bleeding a lot pretty in TradFi. So tomorrow's going to be an interesting day. I got nothing else here, but just be safe and also just keep a rational mind because this market will try and fuck you all the way into buying the top. And I think we're very close to seeing the top.
All right. That'll wrap it up for today. We'll be back tomorrow. Got a few shows left in the year. Looking forward to diving in even deeper. If you have not yet, do us a favor, hit that like button, subscribe to our channel, hit the comments, share us out on social, all of that good stuff. The markets may not be great for a whole lot longer, but we're appreciative of everyone who is joining us day in and day out for this show. So, Chris, thanks for joining in, jumping in on the conversation. Have a great rest of your day, everybody. Stay safe out there, and we'll see you next time.
Take care, everyone.